Well, good morning. Yes, it's me, Kenny Polcari, your host of the party. And where am I today? Well, I'm on the corner of 6th Avenue and 48th Street, just about to go into the Fox studio to be on with Stuart Varney from 9 to 10 today. But I'm right across from Radio City Music Hall, and here we are on a beautiful Friday fall morning in New York City. And today is Friday, September 22nd, 2023. And what is it? And here are the things that you need to know. Well, you know, it was risk off, and risk off is alive and well in the markets, at least for now. The 10-year bond is now yielding 4.49%, while the 2-year kissed 5.2%. Stocks closed on the lows of the day, and you know typically what that means. And the eco data, weaker than expected. You thought maybe that should have been good, maybe not so good. And Kevin McCarthy, Speaker of the House, suffers an embarrassing defeat, while there's chaos now on Capitol Hill amongst the GOP. And what do we have for dinner tonight? Well, we're going to have the shrimp scampi because it's simple to make. It's a Friday evening, no reason to fuss it, so here you go. Okay, so what have we been saying for months now, right? I've been telling you get ready for some weakness as the risk-off mentality takes root. And the story's not anywhere near over, I don't think, right? The recent weakness in risk assets turned uglier yesterday. Stocks continue to retreat. Bonds continue to sell off, sending yields up, and the VIX, the fear index shot up by 8% alone yesterday, right? This now takes that index up better than 38% in just 4 days, while the VIXI, the ETF that plays on that, is up just about 10% during the same time frame. In the end, it is the ongoing relentless surge in Treasury yield that is now causing all the angst for stock investors. The 2-year ended the day yielding 5.14%, but after kissing 5.2% earlier in the day. The 10-year ended the day yielding 4.49%. Right? Say that again. It's 36 basis points higher than it was on September 1st, just 3 weeks ago. Now, the U.S. followed the lead of the Europeans, where we saw all markets across Europe close near their lows on the day on Thursday. And with all those market centers down more than 1.4%, the only exception being the UK, which actually saw a retreat of just 0.7%. But yesterday afternoon at 4 p.m., we assessed the damage here in the United States. The Dow losing 370 points or 1.1%. The S&P down 72 points, 1.6%. The NASDAQ got whacked again, losing 245 points or 1.8%. The Russell gave up 29 points or 1.5%, while the transports lost 107 points or just 0.7. Each one of these closing on the low of the day, only adding to the ongoing angst. And when they do, when they close on the low of the day, they usually test lower, at least in the morning of the next day. Now, unlike Wednesday, every sector yesterday was in the broad 11 S&P sectors was lower. Again, the best year-to-date performers in the group saw the most selling. Hello? What have I been telling you all along, right? Tech down 1.5%. Communications down 1.2%. Consumer discretionary down 2.7%. And this makes sense. Should surprise nobody, right? All of the other sectors, though, were not that far behind, with some of them seeing losses better than 1%. Now, if we move further down the list, you saw home builders down 2.5%, semis down 1.8%, disruptive tech down 3%, oil, exploration, and production down 1.2%, metals and miners down 2%, robotics and automation down 2.5%, aerospace and defense down 1.7%, cybersecurity down 1.8%, pharma down 3.5%, the American Industrial Renaissance ETF down 1.7%, airlines down 1%, the growth trade down 1.7%, while the value trade is off by 1.5%. And if you hedge your portfolio with some of those simple hedges that I keep talking about, you were able to offset some of those losses by using the DOG, which gained 1.1%. The SH was up 1.8%. The PSQ added nearly 2%, while the VIXI, the VIXY, added 8%. Remember, these are strategic hedges. They are not long-term holdings. They are pointed and specific. And if you went out a bit further and you bought the Direxion 3 times levered short ETF, the SPXS, you would have gained a whopping 5.1%. Conversely, though, were you long the Direxion 3 times levered long ETF, you would have lost the same 5%. You see how that works? Now, the economic data yesterday was also weaker, right? Which maybe should have been a positive, right? But it only added to the angst. Now, I say it could have been a positive because that does suggest that the Fed is succeeding, right? But as investors didn't take it that way. The Philly Fed survey down 13.5%. worse than expected. Existing home sales down 0.7. This was expected. This is unexpected because we were expecting a gain of 0.7, right? But think 7.5% mortgages playing a role there. And leading economic indicators down 0.4%. Today's eco data includes U.S. manufacturing and services PMIs, expected to be 48.2, contractionary, and 50.4, which is expansionary, respectively, right? Now, to add salt to the wound, the House GOP is once again creating chaos among themselves, as Kevin McCarthy appears to be unable to bring the group together for a vote on funding the government for another 30 days, sending them all on recess after a failed procedural vote on defense funding. Just one piece of the larger bill that should have cleared with no problem. And this means that we're closer to a government shutdown than not. And that's an embarrassing failure for the Speaker of the House, putting him very much on the hot seat. Now again, while this is not going to price stocks in the long term, it does and can have short-term implications, especially after JJ's comments on Wednesday. Essentially, anything negative is only going to add to the negativity, right? And when that happens, the place goes to hell in a handbasket. But alas, that's the silver lining. Because when that happens, it creates opportunity. You just need to have a strong stomach. Now look, this morning futures are churning around the unchanged line, right? They're either up or down small depending on the minute of the day, right, as the sun rises over the Atlantic. At 6 o'clock this morning, Dow futures were up 2, S&Ps were up 5, NASDAQ up 50, and the Russell up 4. Essentially, no big deal. Sean Fain, UAA president, will take to Facebook Live as the clock strikes 12 p.m. to make his next announcement about what plants are going to shut down as workers just walk out the door and the strike continues. On the flip side, though, we got Timmy Cook, Apple CEO, who delivered all the new iPhone 15s to the Apple stores around the world, right? And here in New York City, the Apple cult members are lining up on Fifth Avenue, some showing up at midnight because they wanted to be the first ones in line, right? They got their beach chairs and everything. The line is now snaking down the street and around the building as the sun rises. Apple's quoted up $1 this morning in the pre-market, but that could just be because it's down nearly 8% off the early September high, and people are kind of, going bargain hunting. And the fact is that futures markets are attempting to trade up, so the tech names, Nasdaq's trying to trade up, so you might see a bounce in the tech names. European markets are all low with the exception of the UK, which is up 0.4%, after all the other market centers are down about 0.3%. Recall, the UK market is only up 3.5% year to date, right? They've really struggled, but that compares to Italy, which is up 20%, Spain up 15%, Germany up 11%, France and Euro stocks up 10% apiece year to date. Yesterday's announcement by the Bank of England and the Swiss National Bank, the pause rate hikes, is not helping the mood there because they also kept future hikes very much on the table. Oil trading back above $90 a barrel. Gold is trading at $19.45 an ounce, and the dollar index is up 28 cents at 105.64. Making the short-term trend line has now cut through the long-term trend line, creating what? A golden cross, which suggests more upside for the dollar index. Kavish? Now, yesterday I said I thought the VIX, which has made a strong advance, would kiss the long-term trend line, but fail to push up and through. Well, in fact, we did kiss it at 1761, and now we're backing off. This morning, the VIX is trading at 1717. And while I think it's just a bit of a pullback, I do expect that it's going to test it again before month end next week, and then we'll see what happens next. Now, the S&P ended the day down at 43.30, slicing right through trendline support at 43.73, like a hot knife through butter. Now, that's a famous Barbara Streisand quote. I love it. I love the way she says a hot knife through butter. Anyway, we're in this new trading range, right, with the long-term trendline support at 41.89 now and resistance at 43.73. I'm thinking that today it's going to be all about the consolidation and the digestion of the move this week. Next week is the end of the quarter, don't forget that. So we could see more volatility as asset managers prepare for the quarter end marking period. So sit tight because it's all good, right? Okay, so now what are we having for dinner tonight? Well, it's Friday, it's simple. You've had a tough week. You don't really want to spend a whole lot of time over the hot stove. Maybe you want to go out to dinner, but if you don't, sit home and make the shrimp scampi over linguine. It takes about 20 minutes and it's perfect, right? You want to just relax, right? Open up a cold bottle of white wine. That's all you need. Now, for this, you need 1 pound of clean deveined shrimp, right? You want butter, you need olive oil, you need onion, you need garlic, lemon, white wine, chopped parsley, salt and pepper, and then you need, you know, maybe 1/2 pound to 3/4 pound of linguine, right? Depends on how much you're making. And of course you need, as always, fresh grated Parmigiana cheese. Although as a good Italian, they'll tell you you never put cheese on fish. I say challenge. Now, bring a pot of salted water to a rolling boil on the back burner and leave it there. In a big saute pan, melt the butter and add a splash of olive oil, add the crushed garlic, a sliced crushed garlic, and the sliced onion. Saute it for about 10 minutes. You know, you want the onion to soften up. Keep the heat on medium so that you don't burn the butter or the garlic or the onions, but you want it to be nice and soft. Now put the linguine in the pot because it's going to have to boil there for 8 to 9 minutes. You want to leave it a little bit al dente. Now take the shrimp, add the shrimp to the saute pan, season it with salt and pepper, and you want to saute them just till they turn pink, and they're going to turn pink really quickly. So they'll turn pink on one side, flip them, let them turn pink on the other. Now, take the juice of 1 lemon, complement that, put that in the shrimp, take that with some white wine, maybe about 1/4 cup, put that in the pan, and then make sure you have a glass for you. Turn the heat up to high, let the wine steam away, the alcohol steam away, no more than a couple of minutes. Now strain the pasta, always reserving a mug full of the water. Add the pasta directly to the saute pan, add a handful of fresh grated Parmigiana cheese, mix it well, and serve it. Now, you may need to add a little bit more pasta water. If it feels like it's soaking it all up and you want to moisten it up, that's why you save the water, right? So add a little bit more pasta water. If that's the case, you don't want to make it soupy, you just want it to be nice and moist. Once you're done, serve this in warm bowls. Always have fresh grated cheese on the table for your guests or for your family. And you know, this is another meal that you can serve with garlic bread, right? Toasted garlic bread always works well with this meal. Actually, toasted garlic bread always works well with almost any meal. Look, in any event, it is Friday morning. I'm about to appear with Stuart Varney from 9 to 10 on Fox Business. I hope you'll watch. Until next week, take good care.